Okay, welcome everybody. It is the evening of April 23rd, 2011. I am Adam Grimes, and here's all of my contact information. There's email for me. You can follow me on Twitter, AdamG_SMB. And here are two email addresses where you can read some of my random musings on the market. At waverlyadvisors.com, I publish a morning letter dealing with bigger picture themes in the market, kind of macro themes, different commodity markets, currencies. And on the S&B Capital blog, you can read more of my ideas about specific trades and what actually drives markets. And yeah, I've blogged fairly actively at times, and not so much recently because I've been concentrating on the book. But regardless, I think there is some interesting information there. I want to do just a short video today, and I'll probably follow up with a longer video tomorrow looking at more market setups. But I want to talk specifically about silver and about how to trade a market that is in kind of a runaway trend mode, and also about how and when you might think about fading a market like this. So first of all, my trade in silver, um, I had been watching this trend channel develop, and of course we had several. This trend line, as you see it here, did not exist until this point. We'd been working with a steeper trend line into the end of last year, and this is a very typical pattern. You should see a market oscillate back and forth inside of a trend channel. When you see a market press up against the top of a trend channel, not really not really back off, and eventually when it's able to break above and consolidate above, that is an extremely bullish sign. It doesn't happen that often. The normal expectation, of course, you have these tests at the top, like we did in this area. And what we expect is, after some bull traps, that will pretty quickly, maybe not be down to the bottom of the channel, but certainly back off significantly. And we were not able to. So what you will see once the market is able to consolidate and take out, usually that leads to a steeper trend. And frankly, I know this move in silver is a little bit unbelievable, but my expectation would be that we will hold a steeper trend that will then have to go through a more extended topping process. So, in my opinion, and I know a lot of people are on the other side of this trade, but I think it's kind of silly to be fading silver here. There is no justifiable reason. If you if you look at the bands here in the channels, both on, it's a little bit hard to see, but down here on the weekly and on the daily, yes, we're overextended. And the channels, the Keltner channels here, outside of a 20 period exponential moving average, do give us a way to quantify that. There's no magic to this tool, but it reaffirms what we all see intuitively, which is that this market is overbought. This market is a little crazy. Say whatever you want, but the bottom line is it's also really strong. And to fade a market, particularly a commodity, this is not for all of you ETF traders who are watching SLV, and let me flip over to SLV. For everybody who is looking at SLV, this is not a stock. Just I realize that's basic, but you have to remember that this is not a stock. This is not a sector ETF. This is a commodity, and they do trade differently. And for anybody to fade a commodity that's in a runaway parabolic move is frankly stupid. There's no justification for it. So with that on the table, let's talk about what I would want to see to fade a move. Would be a standard topping process. So you would have a market that's extending in trend legs, and then maybe it does go vertical. And what you would like to see is then a significant sell-off, a change of character, and you could look to short into this leg. That would be one way to do it. And that actually is the play that I'm making here in this AG. My argument in AG would be that this leg down, that wasn't very good. Let me try to redraw that. This leg down from there to there is different than the previous declines we've seen. And it is a little bit of a change of character. So my thinking with this trade is that we should be able to short into this, and I shorted here on Monday. And now we'll see what happens. Now a fairly tight stop somewhere in here is probably justified. But this is a pattern. If you this market is parabolic, it sells off hard, and you short into the first bounce, or you short coming out of the first bounce, or something like that. That makes sense. Silver's just strong. You're just standing in front of a train, and it really makes no sense. Um, the other possibility for the way this market might top would be to be in a trend, and then you would have several situations where you were basically putting in some kind of just a double top or a triple top. I drew 4 here. That's probably a little bit excessive, but it is reasonable once you start to see that you start to fade, or you start to do these failure test trades, which if you go back and look at the SMB blog, I wrote about this a little bit. There are some ways you can safely fade these tests, but this is not what we have here. I don't see any evidence of that. And this situation happens in commodities. If you actively trade commodities, you'll probably run into this about once a year, maybe a little bit less. Let's say maybe once every year and a half, some market will be in this kind of runaway trend mode. And let me show you a silly, simple way to trade this. Is very simply, so we established a long position here, and my initial stop was somewhere down here. I do tend to give things a lot of room. And we established a secondary position. We sold some of it and reestablished on a breakout here. But once the market decisively takes out the top of this trend channel, then your stops can come in very, very tight. So once we turned up out of here, just a few days after my entry on this bar, my stop was somewhere in here. Once we turn up out of here, your stop is here. Once we break up out, and as we're in this consolidation, I'm still thinking there's the possibility of some kind of bull trap up here. So when we're here, my stop is here. Once we took this out and we're in decisive crazy mode, then each day my stop is under the previous day's low, or even in some cases actually inside the previous day's range. So on this day, my stop is here. On this day, my stop is somewhere here. On this day, my stop is here. On this day, my stop is even, so I think my stop is even above 44. This is basically what this is you're using a stop loss order as practically a profit taking technique. I don't know, this market may go up another 5 points without ticking down. It's completely possible. If that happens, there's no reason for me to sell into 45 or 46 or even 50. Just like there's no reason for you to short it. There's no reason if you have a long position to sell that long position. What we are, of course, afraid of is that when the break comes, and this is what's seductive about everybody trying to short, you're going to see a big bar that looks like this. It's completely possible. I think actually the way this market is acting, it's a little bit less likely than it was a week or so ago. But what I'm asking is, I'm just asking the market, make a downtick, get me out of the remainder of my position. I've got like 3/4 of my position still on. So that's a trailing stop technique that is kind of mindlessly simple, but you can use when you're fortunate enough to be involved in a runaway market. Just trail beyond, either below the previous day's low or even somewhere in the previous day's range, aggressively moving that stop up every day, locking in those profits, and hoping to book a good profit. One more thought on this: if you're trading SLV, don't be confused by the gaps you see. Remember, SLV is an ETF that trades in the normal U.S. equity hours, and these metals are traded actively all across Asia, all across Europe. You're not coming in and seeing a gap in silver. You're seeing the result of London's trading session and the Asian trading session. So again, for equity traders trading in these markets, The most important thing to remember is that this is not a stock, and they don't trade like stocks. So that's all I have for now. I will come back later this weekend looking at some specific stock setups.